trends. The trend is your friend. Markets do not usually move in straight lines. They move in waves with continuous ups and downs. The direction of this overall movement is a trend. Trends are one of the core elements of technical analysis and the foundation of understanding market movement. I am sure you would have come across the popular statement amongst traders, "The trend is your friend." We will revisit this in more detail in the chapter on trading strategies. Broadly, there are three kinds of trends based on the overall direction. Uptrend. While there are ups and downs in a price chart, in an uptrend, we can clearly see the overall price movement going up. Each successive peak is higher than the previous one. Each successive trough is higher than the previous one. There are periods of downwards movement as part of the smaller waves, but these are called pullbacks, as the overall trend is still intact. This is indicated by the straight blue line that we have drawn in the chart. Downtrend. In a downwards trend, each successive peak is lower than the previous one. Each successive trough is lower than the previous one. This is indicated by the straight blue lines that we have drawn in the chart here. Sideways trend, also called consolidation. Many traders do not consider this as a trend. This is usually referred to as consolidation, where the price does not really go anywhere and keeps oscillating between two levels. Some traders also refer to this as choppy market. Most active traders, whether they are day traders or swing traders, usually like to trade trends, up or down. Sideways movement is usually frustrating as one enters a trend expecting the price to move up or down when it just turns back and stops them out. Subtrends within a major trend. In the previous section, we saw some 5-minute charts and some daily charts. Trends can be seen in a chart in any time frame, but defining the time frame is important when you say that the trend is up or down. Consider the chart here. One can clearly see the uptrend. See the long blue line. But as indicated with smaller blue lines, there are intermediate trends which can be sideways, downwards, or upwards. It is important to understand this distinction. So, let's say a trader, Sam, is taking a long-term position on AMD, holding over many months. We have another trader, Peter, who is into swing trading and holds only for a few days. If you look at the short-term downtrend shown in the chart, Peter may play a short position and make money over the next few days, while Sam is invested in a long position since many months back. Eventually, both may end up making money even though their positions were opposite to each other. So, the perspective can be entirely different depending on the time frame and whether you are focused on short-term or long-term trend. Someone who invested in long position and wants to hold for many months or years is not bothered by short-term consolidation or downward trends. For this trader or investor, these are just the waves in a long-term uptrend.